Morning trade. We'll focus on Alphabet following the sell-off this week. And Jeff Pierce is here, Senior Manager, Derivatives Trading, Charles Schwab. Good morning to you. Some of your thoughts on Alphabet.
Well, I think investors are seeing that Alphabet is at a real early innings of an inflection point here. It's been a very long time since we saw their browser dominance, their search dominance, I should say, really, be put to the test. And for the first time, due to a lot of these new AI developments, that seems to be coming to light. And I think over this week, Wednesday, when we saw the senior VP of service from Apple say that the Google search volumes were down across Safari browsers in April for the first time, that really got investors' attention. Now he cited AI chatbots like Perplexity, Anthropic, ChatGPT, all for the slowdown, and also added that Apple themselves are looking at potentially adding AI search providers, including names like OpenAI. If you look at Alphabet, they've said those numbers on the search queries are still growing, that users are accessing it for new things and new ways. And then, of course, the question of this Google dominance, are they losing power? Google themselves have also been disrupting their search engine with their AI generated summaries. Those don't generate as much revenue because of the way the ads are laid out. They're looking to change that. In some ways, this testimony might have actually kind of helped the case that Google has in terms of the antitrust case, because they're, in some ways, Apple is saying, yes, we've had these relationships with Google in the past. Yes, they've had this dominance, but we're actually seeing some of that search slow down, and we're looking for additional partners. So I think investors are trying to weigh whether these data points are good news or bad news for the future.
I do want to talk about YouTube and some of the other statistics, but you did mention that it is concerning when you think about the AI names out there, and they're trying to steal that search space, right?
Yeah, absolutely. I mean, if we look at what ChatGPT has been able to do, the extreme growth we're seeing there, again, in the past, there's been no real reason for the average consumer to switch to a new browser away from Google. We've seen other browsers try to compete, update their capabilities. We've seen certainly regulators put pressure on what Google has and from an antitrust perspective. But there's been no incentive. AI and the search bots have really changed that case. Now, it's not necessarily that consumers are just switching to a new browser, but they're just using that browser less because they're also utilizing these chatbots.
Yeah, I saw, you had Citi keeping the buy rating with the 200 price target. I'm not going through all the price targets. My point is they think there's upside potential. Search is such a majority. I think you said 75% of the numbers there. But something like YouTube, not fun to see the advertising revenue missing. What could be the catalyst? I mean, maybe you want to tell us a little bit about the YouTube story, but, what are the good spots for Google?
Yeah, I mean, you're absolutely right. If we look back in 2024, 198 billion comes from Google search and other. YouTube ads, just 36 billion, right? Certainly we look at cloud and things like that. There's a lot of potential growth there. But to your point, YouTube, advertising revenue missed slightly. It was coming in at 8.93 billion. We know that, there is certainly some competition in that area. It's a potential growth driver, and they've done a lot of good things within the YouTube space. Certainly seeing them compete more with TikTok and other names as well. But that's an area where they're going to have to really push growth. I think cloud growth is also an area where we're seeing revenue, jump 28% over quarters, numbers like that, and the margins for cloud are relatively good as well. So that's going to be an area where investors are going to be looking for them to see more revenue start to pile up, especially in fears of what could happen to search.
Right, understood. So there's so much more. I mean, you talk about cloud and the other bets there. What else? What's the last final thought here on the whole big picture on a name like Google?
Well, I think investors are looking right now and wondering, is this a good time to buy, or should we stay away from this? You have to look at the full picture. Certainly, if you're looking compared to other tech names, valuation standpoint, there looks to be some opportunity here, but this is also a value trap. So I think the question mark out there is for a lot of investors, they have to decide right now whether they think, or not right now, they have to decide whether they think Google's going to contain this dominance, how things are going to shake out with some of the antitrust rulings at the end of the decision process here. And we still have time. I think this is early innings of this disruption, and it's possible certainly that Google can continue to drive dominance even with their AI side of the business.
All right. Well, thank you, Jeff Pierce. It's great to see you. I mean, I know that we talked about Citi with the $200 price target. Thank you very much, Jeff Pierce. A good look there at Alphabet at 154.33 today, but we do want to trade it, right? So while it's not moving too much here today, what are the possibilities for making some money on a trade? Charles Moon is taking a look at this, stock strategist, Prosper Trading Academy. How would you go about an example trade here for Alphabet today?
Yeah, so I'm looking for what's known as an inside candle trigger. Now, we had that big trading range on the news as it negatively impacted Google, caused them to cascade all the way down towards that 146, 147 level. They bounced right back, but yesterday they really traded in an extremely tight range. And so it looks as if short-term traders and investors are kind of waiting to see what's happening. It really coincides with the overall broad markets. The NASDAQ, the Qs in particular, are bumping up to the 200-day simple moving average. So this has been well-defined resistance. And I believe that the catalyst is actually going to be the Qs having to break through this 200-day moving average and marching higher. There's room in the Dow, there's room in the SPY to get back to those 200 SMA levels. And so I'm looking for a trade where we're going to trade above yesterday's highs. That's going to be the trigger point. I'm going to look for options. I'd like to buy them at 250 or lower, maybe even 275 or lower. Ideally, my stop's going to be at 110. If this trigger and retraces, it's going to be bad news. It's probably going to revisit those recent lows at 147 and perhaps all the way back down to 140. So we want this to turn around and not turn back. I think the upside target is going to be right around 160. There's initial resistance at the 50 SMA, but I do believe that they can recover right back to where they dropped from, right around that 162, 164 level. And in that instance, I'd be looking to take profits probably at around 475 or higher. So this is structured ideally as a trigger-based idea based on the broad market movement, a recovery of Google off of these lows, moving in conjunction with the markets. So there's no reason to be in this trade unless the market is actually breaking out to the upside. So that, allows people to take a more validated position in a stock that has had a lot of negative news this week.
Yeah, and it's interesting because I think Morgan Stanley is somewhat on the same page. I mean, listen to what they said here. They said that they have the overweight of Google parent Alphabet, and they noted that the shares were trading at about 15 times full year 26 $10 earnings per share estimate, which they said was a trough multiple, in their view, tactically a strong buying opportunity. They have a $185 price target, represents about 22% upside, and that's why they reiterated the overweight. You talked about some of the momentum that we've been seeing on Wall Street. I mean, we can't deny that the Dow and the S&P are up 12 of 14 days. Not too shabby, right?
Not at all. And this is kind of in coinciding with obviously the news. It seems that the negative impact of the news is starting to deaden out, and the positive news is starting to get embraced. We used to see the markets really sharply drop on negative news. For an example, this morning before the market opened, they talked about the tariff threshold for China to be at around 80%. That caused a pretty sharp reaction, but the market immediately bounced back off of those levels. And it just seems that we're at this point where we fully have, I wouldn't say fully, but we have definitely started digesting that news a little bit more, and the market is turning more towards positive news as opposed to negative news.
Yeah, understood. All right, Charles Moon, great to see you.